Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, it's a fresh Thursday morning and all eyes are now on the RBI's monetary policy. But what should be your strategy and where are the markets headed? We will discuss this and lots more. But first up, the top headlines for you. Markets will react to major events on Thursday with traders grappling with the weekly expiry, RBI's monetary policy statement and Prime Minister Narendra Modi's reply to no confidence motion in Parliament. Expect volatility and short covering to put bears on the back foot on the Lal Street. And also in the pipeline is the US inflation data coming in late evening today. Weak overnight cues from Wall Street are adding to bulls' worries on Indian markets. Very good morning, Shail. The deflationary trend in China and the downgrade of US mid and small size banks affected market sentiment yesterday. However, a late recovery in the domestic market was backed, by a positive uptick in the European market and hope of an optimistic RBI policy not impacting domestic economic growth. We did reclaim that 19,600 mark yesterday. But where do you see Nifty now and what should be the strategy, ahead of RBI's monetary policy?
Good morning, Tanya, and hello to everyone who's watching us on Business Today. It being Thursday, Tanya, apart from all the woes that you mentioned, we have 4 other issues to grapple with. Excuse me. So one thing I want to make clear, yesterday's green shirt and green tie really worked wonders. At the fag end of the day, you saw a 200-point rally from the low of 19,470 to a high of 19,640. So these things really work and people should pay attention to it. Now let's get back to what real data is. This was of course an aside. 4 things are going to impact the market today. So first things first, Tanya, there will be no trade till 10 a.m. One, the Nifty will grapple with its problems leading to the weekly expiry. Yesterday you've seen a fantastic short covering move that's kept bears on the back foot and at least put the bulls, as far as the Lal Street is concerned, in the driving seat. Now what are these 4 major things? The Nifty closed at 61 points higher, 19,632, and the day's low was 19,470. So you can see the run up that's happened towards the close, plus 62 points and another 140 that it recovered from the day's negative low. Okay, so weekly expiry we have discussed. The RBI credit policy statement comes at 10 a.m. So the moment it's announced that rates will be held steady, we'll take a look at it. The Nifty, as you see on the chart, it made an outside bar. That means yesterday's high was more than Tuesday's high and yesterday's low was more than Tuesday's low. So Tuesday is enveloped between Wednesday. So that is not exactly a good sign. The Nifty is trying to shake away weak traders, which might be on the bull side or on the bear side. But the fact remains that it's going to be a very volatile and choppy day. So weekly expiry, RBI's credit policy, and of course Prime Minister Shri Narendra Modi will speak in Parliament today on the no confidence motion tabled by the opposition. So that is also an important event. And lastly, US inflation data, while it comes late on Thursday night, but we'll be making all efforts to react to it much before what Wall Street does. So these are the 4 things that you're looking at. So the first hour of trade, just remain on the sidelines, do really nothing. Action will pick up post 10 a.m. and the RBI, as I said earlier, is likely to put interest rates on a pause mode as it did in April. So nothing much expected there. We'll be looking out for the commentary on inflation, the commentary on food prices, and commentary on how to keep the rupee steady in the face of global turmoil. Tanya, I know you'll discuss Wall Street a little later, but the most worrying thing is crude oil prices. We'll put a wood on it a little later. So that's what I have on my plate. The Nifty trading range is seen anywhere between 19,500 to 19,800 based on the option data, but I would suggest just avoid the Nifty for today and wait for these events to pan out. I think we are going to expand the range on the lower side, but let's see how it goes. Tanya.
Okay, absolutely. That is all about Nifty, but let's talk about Bank Nifty also, Shail. The Bank Nifty seems to have turned cautious ahead of the MPC policy meet outcome, and it closed 84 points down at 44,881 odd level yesterday. But there was a smart recovery of around 350 points from the day's low. So is it going to be a roller coaster ride for the Bank Nifty today? So what are you looking on?
So Tanya, I am so sure of not doing anything on the Bank Nifty that I did not even make graphics today. So nothing at all till the RBI credit policy and RBI statement is over, and only then will we take a call on the Bank Nifty. You very rightly mentioned that Nifty Bank slid about 0.2% at 44,880. Remember, it's again in that narrow, tight range between 20 and 50 DMA. Both indices, whether it's Nifty or Bank Nifty, are seeking direction from the broader market. There are too many woes globally to deal with, including crude oil prices now at 9 months high. It's a sentimental negative for the Indian capital markets, but be that as it may, I would just say, Tanya, let's keep quiet till about 10 a.m. It will be a difficult trade in any case, volatile and choppy. And more importantly, 9 companies from the F&O space, including 2 Nifty companies, which is Grasim and Hero Motors, will be declaring their earnings. So both of us have our plates full. Let's look at all these events and then take a call, and on the meanwhile enjoy the action from sidelines. Tanya.
Okay, absolutely. That was Bank Nifty, but let's talk about F&O space as well. Lots happening there also. So what are you looking at in the F&O space today?
Yes, Tanya, that's an interesting question. So I had mentioned that sector rotation is happening. Cement has now emerged as a great play for bulls. So JK Cement is something I'm looking at. Of course, this is a high beta item, about 3,400 on the charts. But what's really, really fantastic is the kind of open interest that it came up with, up about 10.5%, and 1x rise in deliveries. So cement is bullish, including JK Cement. Lot size is 250. The other stock that I'm looking at in the cement space is India Cements, very, very high beta, and the stock, true to its nature, rose 6.6%. And would you believe it, there is so much of short covering on India Cement that the open interest actually decreased at about 18%. The charts are pretty good, and adding luster to this particular potential trade would be the delivery statistics. They are up 3.75x compared with Tuesday for Wednesday. So India Cement and JK Cement from the cement pack. Earnings boy trend, very, very strong numbers, huge long build up happening, 16% rise in open interest, and the price at about 4.5% higher. Remember, these are high ticket items. Tanya and I can't do anything because the price is governed by the market, but we can definitely provide you with cues. Apart from that, Petronet LNG, low ticket, 230 rupees, 2.9% higher yesterday in futures. The lot size is 300, and the open interest is about 5% higher. So these are the numbers that I'm looking at on the long side, Tanya. And like I said, 2 Nifty companies and 7 F&O companies will be declaring numbers, including Hero Motors and Grasim, as also Steel Authority, as also Biocon. and so on and so forth. The numbers are coming in front of you. So these are the ones that I'm looking at. In terms of sectors, of course, auto and banks on the long side, and in terms of bearish sectors, I would imagine realty is facing a problem, and that should impact negatively.
Okay, absolutely. And let's talk about global markets now. So US stocks, they closed lower on Wednesday, a day ahead of the US consumer price index inflation data that could influence Federal Reserve interest rate decisions. The Dow Jones that fell around 191 points to 35,123 odd level. The S&P 500 lost around 31 points to 4,467, and the Nasdaq Composite, it was also down 165 odd points. Asia Pacific markets also fell today as investors, braced for July consumer price index data out from the US. Oil hit new peaks on Wednesday with
Tanya,
Brent crude. Yeah.
I'm sorry, I couldn't get your statement.
Okay, I was talking about oil prices, Shail. So oil hit new peaks on Wednesday with Brent crude touching the highest price since April as tighter supply owing to Saudi and Russia output cuts offset concerns over slow demand from China and a report showing rising US crude inventories. So what is now essential to track from overseas cues?
Tanya, I think we are discussing oil prices. If I get your question right, my apologies, your voice is echoing in my ear. Yes, far better now. So it's the sixth continuous week of higher highs and higher lows on WTI crude, and the price of $84.28 per barrel is the highest since November 14th, 2022. So we are actually staring at an let's say a 10-month high on crude oil prices. This is really worrisome for local sentiment, and apart from the macro that we are facing globally, these are headwinds that would probably put bulls on the back foot on the Lal Street. So that's how it is. Strong crude, earnings not really good, the Nifty and Bank Nifty seeking direction, and three major events lined up. Like I said, make a very good cup of coffee, enjoy the scenery, and enjoy watching the market till 10 a.m. and then we'll take a call. Tanya.
Okay, absolutely. And let's talk about sectors also, Shail. You have been, talking about pharma sector and then IT sector. But which are the sectors now that you are bullish on, and which are the sector one should avoid?
Tanya, one of those things in life and in the beautiful world of markets is sector rotation. Like I said in the beginning of the commentary when we were discussing futures and options, it's the cement space which will now take the baton from pharma. We've seen many fantastic moves, whether it is Lupin, whether it's Natco Pharma, whether it's Aurobindo Pharma, Cipla, even to some extent Sun Pharma, and a host of mid-cap companies like FDC and Marksans Pharma as well, where markets have run up, prices have run up very substantially only because they were under-owned and underappreciated. Of course, the news of a potential buyout of a large minority stake in Cipla also helped sentiment on pharma shares. But I would imagine that we've done enough. If you see the pharma index, it's really rocketed to fresh record highs. So now the time comes for a sector rotation, and just as the monsoon ends, the physical demand of cement comes back into the broader economy because construction resumes, and therefore you see rallies happening in Orient Cement, in India Cement, in Grasim, as also in Ultratech. So these are the sectoral rotations. I would imagine the baton will now be handed over to cement, and pharma will pause. Biocon has earnings today. It's most likely, nothing great is going to happen there. But that's how life is.
Okay, absolutely, Shell. And back to the important decision that's going to come out today. So, what is what would you watch out for? Because RBI is likely to keep the rates unchanged, but what's that one thing that we should watch out for?
Tanya, two or three important things. In April, in the last quarter, the RBI, the Reserve Bank of India, and Governor Shaktikanta Das made a very telling comment saying that they are pausing interest rates. It's not a pivot, it's a pause, which basically means that the governor will watch how economic data pans out and then take a call on how to calibrate and control interest rates. During that time, we've had a 25 basis point rise in the US interest rate by the Federal Reserve there. So now we have to understand it from that point of view as to what the RBI is looking at. Remember, the rally in markets, domestic markets, started in the first week of April when the RBI said it's a pause. So real estate, uh, uh, real estate, FMCG, these are the three sectors that immediately started rallying very sharply and went on to make record highs simply because a large part of the physical demand for their products is governed by underlying interest rates. Now, we've seen a very, very good market appreciation. The Nifty is up despite the correction about 11-12% from the low of April. My feeling is that given the problems that we faced due to excessive floods in regions where rice and wheat are grown, the RBI will be having a hawk's eye on inflation, and that is going to be the core of the statement of what we are going to hear from 10 a.m. onwards. So rates will be held. I don't think so. They are going to be tweaked either up and definitely not down. So that's one thing that I'm looking at, and the fact that what the tools RBI will use to control WPI inflation. It's running amok, Tanya. You and I are not impacted, but the kitchen chatter on how prices of rice, tomatoes, onions are rising even in upper middle class homes is sure to have reached the ears of the Reserve Bank of India, and it's going to take action there. So inflation is what I'll watch for. Any changes in the growth forecast, definitely, and any comments that globally Mr. Shaktikanta Das will make on the crisis in Russia, Ukraine, the commodity problems that we are facing. Today's news is deflation in China. That's worrisome because China is a huge trading partner for India, and the July data for imports and exports in China shows a very sharp fall as far as the percentage is concerned. It's a high teen percentage in fall in exports and fall in imports for China. So all these things will impact the rupee, and his statement on how to monitor the rupee, how to monitor the inflation, and of course where growth is going to come from are critical points. Tanya.
Okay, absolutely. And Shell, now it's time to welcome our guest on the show today. We have with us Mr. Abhishek Jain, who is the head of research at Arihant Capital. Mr. Jain, thank you so much for taking the time out and joining us here on Business Today television. All eyes are, of course, on the policy outcome. But I want to, ask you that what would you watch out for as far as RBI policy is concerned, and how are you approaching markets, because markets have been in a consolidation mode, and investors have turned cautious ahead of the monetary policy. So what's really next for Indian markets according to you?
So, good morning, ma'am. Thank you for inviting me on your show. We would like to see two, three things on the RBI policy. First thing, our view is there is a some hawkish view. Hawkishness can come even if it's a pause will continue, but there will be some hawkishness may continue because of the some of the agri prices have increased right now. So I believe these are likely transitory, but this should have some impact on the commentary of the RBI at this point of time. Overall, business sentiment is still the demand side has not been very strong at this point of time. The RBI has understood this thing, and as Shell sir has earlier also uh, talked about, we have seen a recovery in the markets. One of the key triggers is the RBI pause which they have taken. I think that will continue for the time being, but there will be some hawkishness is quite possible. Also, we'll be looking out the RBI commentary on the inflation targets, how they see inflation targets, if this is moving something northwards. Is there any risk going forward? Also, there are two, three factors which we'll be looking out right now.
Okay, what about stocks, Mr. Jain? Your top bets, if we talk about.
So the stocks, I would like to, because ma'am, this is just our coverage stock, so we may have recommended it to the clients. I would like to go for a disclaimer, or maybe Arihant Capital may be holding the stock. But personally, I don't own any of the stocks which we have discussed, but Arihant Capital and its clients and may hold the stocks. So I would like to start with Thomas Cook India Limited, which I think have posted its numbers yesterday, and they have posted very strong set of numbers. This is the first quarter you have seen after COVID. Uh, they have announced all gun blazing. You can talk about the margins in terms with all four segments: financial services, travel and tourism, even Digi Photo and other, all three, four segments have done very well. I think, and this is something which I believe this is, and with the government clarity on the TCS fund, up to 7 lakh rupees, they'll continue with 5 lakh and the rest will be. So for a Thomas Cook, it won't be any impact. There are three, four triggers which going forward, which I perceive. First thing, and the second, generally for these companies, second half has been very strong, and second half, you are going to see a lot of inbound traveling coming to India right now, which is a very high margin business. Also, second important thing, the Digiphoto side, they have acquired 51 to 100. So this is again add to EBITDA on overall basis and will consolidate the numbers for the company. So this is second, third important thing which I perceive right now. On the Digiphoto side also, they have, it's a very, like, you have to do a lot of investments when you acquire new assets. They have acquired 10 new assets in this particular quarter. So there will be some impact on the revenue, obviously on the margins, but I see this 5%, 5.5% EBIT margins can easily move up to a double digit in
Okay.
going forward. So these three, four triggers are there. Plus, the competition side, there is a consolidation in the industry and after the COVID. And I believe this is still quoting at a much lower level than the peers at this point of time.
Okay. And Mr. Jain, what about mid-cap IT? Because we have seen, street is actually divided when it comes to IT sector, but mid-cap IT has not disappointed that much if we compare it with the large cap IT companies. So, what are your thoughts on mid-cap IT and any stocks that you like from this particular pack?
Ma'am, on the mid-cap IT, some of the companies, the commentary was very strong. Like if you see Birlasoft, given the environment we are right now, and Birlasoft or few other companies in the sector, the commentary was very strong. Even the Coforge commentary was very strong. There's a large mid-cap is there right now. One thing is there, US, when there's no slowdown at as per se, whatever the early sign of weakness were there, but still the retail and US sales are there, and the market is hopeful. Uh, the strength in the US market may continue for some more period of time, and which will help some of the companies in the sector. Second important, the salary pressures, which were the or attrition, which is now it is being toned down substantially, so which is impacting margins on the positive way right now. So there is some tone down in the demand, which we have seen will continue, but most of the factors has been there right now. The market is realizing, and then there are some stocks where they are confident of delivering growth. The market is repricing its valuations for the companies.
Okay, absolutely. And Mr. Jam, what about cement pack? Because this sector is cyclical, and the stocks are back in action. If we talk about cement pack, so what are your mid cap picks? If we talk about cement sector.
So, ma'am, we would like to be remain positive on some of the companies in the mid cap side of the sectors. Yesterday, after a moment, Orient is our coverage stock. So, where I think there is still value. I think Nuvoco is one sector, Sagar Cement, some of the mid-tier segments are likely to see, because raw material pressure is easing and demand environment is not like this is a, you can see, you can talk about historically or maybe seasonal bias is there right now at this point of time, but I believe logistic cost is also, there are some of the companies are likely to see benefits right now. So I don't think so any major like some of the companies are available at 40 to $60 CV per ton right now, and I see some of the consolidation after the acquisition of Sangi. There will be some mid cap, there will be some acquisitions are likely to be there right now. So there are companies like Heidelberg or Nuvoco or some other players in the segments right now. Sagar Cements look interesting. I even Star Cement yesterday the commentary was decent only. So these 4 5 players, I think that can be an opportunity, and you see some margin expansion also. On the large cap side, I think if there will be some clarity, I believe on the IT rate, I don't think so. Shri Cement is something in the large cap has not participated, can be a good investment opportunity. The numbers were quite decent for the company. JK Cement, I
Right.
believe,
Uh,
has expected,
okay,
as
so
per our
Heidelberg Cement
understanding,
and
should.
of course Heidelberg Cement and Sagar Cement is
I,
what Abhishek likes when it comes to the mid cap space. Let's take this conversation further. Uh, Abhishek, mid cap tire companies, Apollo at a record high, JK Tire at a record high. Anything that you prefer in that space?
uh, on the mid-cap tire companies, we are right now, we have a neutral stance right now. However, the numbers were much ahead of, because Apollo is our coverage stock, and our price objective is 420 only right now at this point of time. Many companies have been getting the benefit of two important things right now. The two or three things. One, the Chinese import, which was very strong pre-COVID, now it's completely. This is help after sale companies which are strong in the after sales market like Apollo Tires, and now in Apollo there are talks of European recovery also. So if Europe started recovering at some point of time, people will start getting
Right,
into those things. But also there will be some margin benefits
right.
are going to be there
Let's
right
let's shift focus to what the pre-open trades are likely to be. Remember, the gift Nifty is showing a negative tick of about 80 points. We are going to react to that, and of course, all of Asia is weak because of Chinese numbers that have come in. But Tanya, our markets are our markets. The Nifty is showing a very nice deep green flavor. Let me ignore it because that's not how the markets are going to open. Slowly it's moving towards the red sign, and yes, down 40 at 19,594. So the battle today will be for 19,600 between the bulls and the bears. Now let's see how the prices are ticking. HDFC Bank is down a percent, 1634. ICICI Bank is mildly in the green. Reliance is half a percent higher, 2547. State Bank of India, nice uptick in the green, 1% higher, 579. Axis Bank in the green, mildly though, 950 is what I see. TCS Infosys 0.7% lower, 3440 is what TCS is doing. Infosys at 1391 is down 0.2%. Nifty now 17 points lower at 19,613. Let's look what is going to happen in the F&O space. Remember, 9 companies are going to declare earnings. First of the block is Z, down 4%, reacting to its mediocre set of numbers, down 4% at 232. Let's look at the gainers here. Beaten down Tata Chem, now showing some green shoots, 1% higher, 1020. IRCTC 1.5% higher, 660. Tata Power, remember these are very high beta counters that I am talking about, strong numbers, 4.3% higher, 245. Berger Paints made an announcement for a bonus issue, 2% higher, 718. Let's see, earnings boy, Steel Authority, 1% higher, 93.75 before earnings are announced. What else is sticking in the green? Nothing much here, Tanya. Let's look at losers in the F&O space. Granules, numbers were terrible, 7% lower at 300. Shree Cement, 1% lower, 24,100. Bata, bad numbers, 1.2% lower, 1680. Container Corporation ahead of its earnings, quoting 1% lower at 703. Let's look at the broader markets now. Nifty settling 50 points lower at 19,583, in sync with what the gift Nifty is doing and in sync with the mild weakness that we are seeing across Asia. Let's look at the gainers in the F&Os in the Nifty space. There's a 13% uptick on FDC. I am sure this will settle down, but again a pharma stock, again a buyback, and again a very strong breakout happening. Tata Power is up 4.5%, 245. Natco Pharma, very strong numbers coming in yesterday. It's a multi-month high, 3.5% higher, 925. PVR Inox 1.2% higher, 1660, and of course we have PI Industries 0.5% higher at 3,907. Tanya, anything that you've observed? Nifty now 50 points lower at 19,580.
Absolutely, Shail, and stocks like Hero MotoCorp, Life Insurance Corporation (LIC), Grasim Industries, these stocks will be in focus ahead of their quarterly earnings. And we have Apollo Tyres as well, Mazgon Dock, that company is gonna report its numbers, Steel Authority of India. But meanwhile, let's welcome our market guest, Mr. Rajesh Palvia, who is the head of technical and derivative research at Axis Securities, now joins us. Good morning, Mr. Palvia, and thank you so much for taking the time out and joining us here on Business Today Television. All eyes are on the policy outcome, MPC meeting outcome, and but what about the levels? I mean, what are the important levels now to watch out for, and what do the technical charts now suggest for the Indian markets?
Yeah, good morning, everyone. So, in the previous session, we have seen again a short covering action for Nifty as well as for Bank Nifty, and both indices have shown good recovery from their lows. Looking at the data setup, if Nifty manages to hold above 19,550, 19,500 level, then there is no as such worry in terms of setup for the Nifty on the bullish side. So near-term trend is also indicating that if we hold this level, then possibly Nifty will try to give some more recovery in the current today's session also. Yes, there is some nervousness ahead of RBI policy, but overall, if we analyze the structure of market, that is on the bullish side only. Mid cap, small cap space is doing well. Broader market is showing good buying interest. So overall, structure is on the buy on dips kind of strategy one should deploy in the market at the current juncture also for Nifty. 19,500 is your stop loss. Once we able to cross above 19,650, then we can see a short covering action in the Nifty, and on the higher side, it may scale up to the level of 19,700 to 19,750 in today's session also. So overall structure is on the bullish side. Bank Nifty is also showing a strength. In the previous session, we have seen most of the banking stocks have done well. PSU Bank, private banks have shown good buying interest. So looking at the overall setup for Bank Nifty also, we are bullish. Till we are holding above 44,700, there is no as such worry in terms of trend on the Bank Nifty on the bullish side. On the higher side, 45,200 is the immediate resistance, or you can say supply level. Most of the call writers are there for this strike. So once we able to cross above 45,200, then we can expect a short covering action towards 45,400 to 500 in today's session also. So 45,200 is the key level.
Right, Rajesh ji.
Yeah.
Right. Rajesh, good morning. Welcome to BTTV. One or two stocks that you're looking on the long or the short side when it comes to technicals.
So first stock on the long side, that is trend. Strong buying action in the previous session. Multiple resistance zone breakout was there on the daily as well as on the weekly time frame. Long build up was there. So we are projecting target for trend is around 1840 to 1850. One can buy with stop loss of 1765. Another stock is Bharat Electronics. This is the fifth consecutive day where stock is forming higher high-low formation, which is clearly indicating that there is a sustained buying action is happening in the stock. So we are projecting target for 139 for BEL. One can buy with stop loss of 128.
Right. Let's look at BEL. I'm requesting the PCR to put in a daily chart. As Rajesh very rightly says, it's rallying for the fifth day in a row, and we've seen a very nice long build up happening on futures. Of course, these prices are almost record highs. The one that is in the futures is somewhere like 130, 195. About a 2% rise in open interest and a mild uptick in delivery statistics. Remember, it's a high beta defense play owned by primarily the government of India. So a PSU basket stock which is in very high demand, a defense play which is in super high demand, already showing very strong chart characteristics. So that is one pick that's there. Trent earnings were beyond wonderful, and Rajesh has picked it up really well. The stock closed at a record high yesterday, 1788, and in cash, and maybe 1808 in futures. It's opening mildly higher, so you can chase momentum if you like, but these are the two stocks on the charts which look good to him. Rajesh, we've seen sectoral rotation happening and starting in cement. Anything that you like there in the cash or the mid cap space or the FNO space which could give nice short-term returns in, say, maybe a couple of weeks or even less?
Yeah, most of the cement stocks from large cap as well as from mid cap space are showing good traction. India Cement is one of the stock where we are bullish, and we have seen a smart recovery from a recent low of around 215 level, and now stock has managed to give breakout on the daily chart of its last 5-6 days consolidation range. So looking at the setup for India Cement, we are bullish and we are projecting target of 238 to 245. One can buy with stop loss of 226. Another cement stock that we like from mid cap space, that is JK Cement. JK Cement has also given breakout on the daily chart, and if you look at the daily setup, it has managed to give breakout of its falling trend line. Now stock is very well placed above 20-day, 50-day moving average, and the kind of buying interest was there in previous session is clearly indicating that this stock can also scale up to the level of 3450, which is the previous swing high. And once the stock crosses above 3450, then possibly this stock can rally towards 3600 also. So JK Cement is also buy with stop loss of 3340.
Right. So these are the numbers that charts that Rajesh is looking at for the short term. Tanya, the pre-open trade is settled down. The bulls have managed to keep 19600 with them, although down about 27 points. And let me tell you the stocks which have shown some good traction. So from the pharma space, we are looking at JB Chemicals and Pharma monthly high breakout that's happened. We are looking at FDC, which is opening substantially higher. We are looking at Pfizer at 4061. 1 second, please. Let me just readjust the screens. And of course, we are looking at Trent opening substantially higher. These are the ones that we've already discussed, and FTC, the price of 420. I think this is a record high. Just let me check on FTC. This is one stock that we need to look at. Rajesh, can you look at this pharma play? Yes, we are going to see a record high on FTC. Remember, a buyback was announced, and the stocks in the cash segment, of course, at 420. Your comments on FTC, Rajesh?
So very strong buying action since last couple of week, and if you look at the weekly, monthly setup, stock is bullish across all time frame, and now stock is managing to give breakout of all its all-time high level also. So if at all stock crosses above 400 mark, then possibly this rally can extend further higher. As we can see on the monthly chart also, it's almost a rounding bottom formation breakout is going to take place once it crosses above 400 level, and then possibly stock can scale up to the level of 450, 460 also in the positional basis. So very strong setup for FDC. Buy and dip should be your strategy. One can accumulate this stock. If you get any opportunity to buy this stock in decline, your stop loss now should be at around 360 to hold the position for positional basis for target of 450, 460.
Tanya, what are you observing? We are 2 minutes away from the open today.
Okay, absolutely, Shail. I think we should look at some of the metal counters as well. Metals were shining in yesterday's trading session. JSW Steel, Hindalco. We should pull up some of the metal stocks for you. Mr. Palvia, what is your take on this entire metal pack? I mean, any top bets that you have from this particular space?
So most of the metal stocks have shown good short covering action in the previous session. So our preferred pick would be JSW Steel. Stock managed to give breakout of its last 5 days consolidation range in the previous session. And looking at the setup, we do expect that if stocks holds above 815 level, then possibly there could be a possibility for upside momentum towards 845 to 850 in the near term basis. Another stock that we like from this space, that is Steel Authority of India Limited. Almost stock has taken support from its 20-day moving average, and in the previous session there was a smart pullback was there. So now if sale holds above 90 level, then possibly this stock can move towards 96 to 98 level in the near term basis. So JSW Steel and SAIL, these two stocks we are focusing from this metal pack.
Right. Let's get back to markets. We are looking at a fairly weak pre-open. Remember, the Nifty is saddled with events today. There is the RBI credit policy at 10 a.m. There is the weekly expiry today, and of course Prime Minister Narendra Modi will make a statement in Lok Sabha against the no confidence motion passed by the opposition. Okay, let's look at prices. Nifty opens flat, down 31 points, 19,600. Bank Nifty 100 points lower, 44,760. Nifty IT 82 points lower, 30,850. Let's look at the top stocks in the heavyweight space. What is the weakness because of? It's because of Reliance, down 0.2%, 25.18. It's because of Infosys and TCS opening 0.33% lower, both of them. Axis is down about 0.1%, 948. This is flat. What is sticking in the green? Just L&T, 0.3% higher, 2657. HDFC Bank index heavyweight on the Nifty and the Bank Nifty, 0.2% lower at 1645. ITC 0.2% lower, 457. So this is how the markets have opened. The Nifty down 26 at 19,600. The Bank Nifty pretty much there. Let's just broaden the market view and look at advanced decline ratios. The broader markets are still bullish. The advanced decline ratio 2:1, which is the top performing index. The Nifty Metals Index 0.2% higher, 6692. The Energy Index 0.3% higher, 26407. Let's shift focus to what's happening in the F&O space and see which are the stocks that are on the gaining side. Top gainers, MFSL 9% higher, 860. Z 2.3% higher, 248. India Cement 1.7% higher, 232. BHEL 102.10, 0.8% higher. Let's look at the losers in the F&O space. Granules India, bad numbers, 3% lower, 312. Berger Paints 1.2% lower, 690. Biocon earnings ahead, 267.40, down 1%. And let's look at now the broader markets. NSE 500 on the gainers side. FDC 8% higher, 421. JB Farm and Chemicals 4% higher, 228.33. Abbott India 3% higher. It seems to be a pharma day as far as the markets are concerned. And within the high beta space, let's look at the stocks which are doing better on the long side. India Cement 1.9% higher, 233. Delivery 1.5% higher, 428. HBL Power 1.3% higher, 231. These are the ones in the green. Let's look at the PSU pack because that's in very heavy demand. It's IFCI 3% higher, 1485. IRCON 2.5% higher, 109. These are the stocks that have approached on the green. Tanya, what are you watching in terms of stock prices? Nifty 31 points down, 19,600, about 45 minutes before the RBI credit policy starts.
Absolutely, Shail. And remember, you talked about that cement pack, and you mentioned it in the very beginning of the show. And we can see, Ultratech Cement is the top gainer as we speak. Mr. Palwa, I want to come to you for this counter, Ultratech Cement, and we were talking about this whole cement pack earlier as well. Any top bets from cement sector that you like and for the near term specifically?
Yeah, definitely. So after the corrective move, now most of the cement stocks are showing a good buying interest, and since last a couple of trading session, some buying interest is again coming back to this sector. Ultratech Cement is now moving upward, and now it's trading almost near to its 20-day, 50-day moving average. So on the higher side, 80 to 30 is important level to watch for on the higher side. If stock crosses those levels, then we can see a short covering action, and then possibly stock can scale up to the level of 8300, 8350 on the higher side. As of now, the important support on the downside is placed at around 8120. So till stock is holding 8120, there is a possibility that the stock may give breakout on the higher side, and then we can see a rally towards 8350 on the higher side. As we mentioned in the beginning of show also about India Cement, and that stock is showing good buying interest after the opening, and we expect that as we mentioned, the target of 238, 245 can be there in the stock in the near term basis. So one can look at India Cement as well as JK Cement. So these all stocks which we like from the cement space at the current juncture.
What about Mangalam Cement? That stock is also up in the trade today?
Right. Yes.
Yeah, so mid-cap stocks are also showing good traction post this Adani Group has acquired this Sanghi Industry. So most of the mid-cap cement stocks are also on the limelight, and then the Mangalam Cement is also managed to give breakout of its previous swing high. So now if stocks continues to hold above 345, 348 level, then possibly upside target we can expect towards 375 to 380 in the continuation of this uptrend. So most of the mid-cap cements are also showing good traction. Even if you look at the Orient Cement, also very strong run-up in last couple of trading session. So that stock is also approaching to its previous swing high level, which was formed in the December 2021. So it's going to have a very strong buying action. If it's hold above 185 level, then possibly the next target for Orient Cement could be around 220, 230 on the higher side.
Wonderful rally highlighted by Tanya in the cement space. The other sector, Tanya, which will shine will be power. Remember, in the dying moments of yesterday's trade, I had marked JSW Energy at 301 rupees. It's now ticking very, very sharply up in the cash markets, somewhere around 331 if we can have a look, and with it, it's the entire power pack that's rising. Tata Power is the top gainer in the F&O space, 238 up a percent. I'm very keen to find out views that Rajesh has on Tata Power. Then, of course, we'll discuss NTPC with him. But over to you, Rajesh. Tata Power taking it away, 2% rise in open interest, and it's just 7 minutes to trade's opening.
So most of the power stocks are doing good, and the thematic play we can see in most of the power stocks, and buying interest is there. Even the small companies are also showing good traction in terms of buying. Tata Power is again showing good traction since last 4-5 months. You can see stock is in uptrend, and higher high low formation is taking place. So this clearly shows that there is a sustained buying is taking place in the Tata Power. Looking at the near-term, short-term setup, stock is in bullish territory. 234 is the important level on the downside, and we are bullish. And looking at the setup, yes, we can see a target of 255 to 260 in the near-term basis. Even if you look at the NTPC, also stock is consolidating since last 3-4 trading session after a decent rally. But looking at the long-term setup, stock is in bullish trend, and looking at near-term, short-term setup, one can hold their long position with stop loss of 214. And on the higher side, once the stock crosses about 224, then this rally can extend towards 245 to 250 also. So NTPC and Tata Power, both stocks are looking attractive from large cap space. And you rightly mentioned, yes, a lot of buying interest is taking place in the small size power stocks also.
Tanya.
Okay, absolutely. Mr. Palvia, there are lots of opportunities within the broader markets, and when it comes to the defense and the railway spaces, but we need to be very selective when picking out names. We have seen stocks like RVNL, Mazdog, they have had a dream run. But what would be your top bets from the defense and the railway pack?
So railway stocks are in a bull run, and most of the stocks are showing good buying interest. We have seen most of the stocks like Econ, RBNL, IRFC have shown some profit taking, but again the renewed buying action is taking place in most of the railway stocks. Yes, Ircon is looking very attractive, and we do expect that this stock can move further higher towards 125, 130 in the near term basis. RVNL has taken the support of its multiple support area on the weekly chart at 122 level, and again buying interest is there in the stock prices. Once stock crosses above 132 level, then possibly another round of buying interest will be there in the stock, and possibly then stock can move further higher towards 145 to 150 also. So we are bullish for RVNL as well as Ircon at the current juncture. On the defense play, yes, BL, as I have already mentioned, we are bullish on the defense, and we do expect this stock can do well in the coming trading session, and possibly 145 is the immediate target. HAL is also looking very promising. A mild profit booking was there, but again the stock is showing good traction. Since last couple of trading session, stock is showing good accumulation activity, and near-term setup is suggesting once the stock crosses about 3850, then this stock can also move further higher towards 3950 to 4000 level also. So HAL is also looking very promising from the defense sector.
Tanya, let's focus our energies on Trent. This is, of course, Rajesh's top pick today. The stock at a fresh record high, and that's coming in because of a substantially higher net profit, which the company reported yesterday. 46% higher at 167 crores. Revenue up 45% at 26-28 crores, and EBITDA margin, EBITDA up 26% at 367 crores. All of that working wonderfully well for the stock, and this was of course Rajesh's top pick. Another company that's doing excellently well is, of course, NHPC now. So the power pack is kicking in after JSW Energy, after NTPC. It's now NHPC and SGVN. Remember, these three are government PSUs. Satluj Jal Vikas Nigam Limited, record high. NHPC is National Hydro Power Corporation, record high. And of course, NTPC. In the private space, Tata Power and JSW Energy taking it away. Very, very strong traction coming in the railway pack. Rajesh, this is a question for you. And because you see both the medium and the long term charts along with short term punts, two railway stocks that you would want to pick based on pure chartical trends in the medium term, which our investors and traders can look at for a decent appreciation over the next 6 months to a year.
So, Shailji, first stock which I like, that is Ircon, is looking very promising. Series of higher top, higher bottom formation is there. So, Ircon can be one stock for upside target of 130, 140 on the higher side. Keep your stop loss at 101. Another stock that I like at current juncture, that is IRFC. Some profit taking was there, but again, renewed buying interest is taking place in the IRFC, and looking at the long term setup, we are bullish, and we expect a target of 65 to 70 on the higher side for IRFC. So one can buy and accumulate this stock with stop loss of 46.
Trent, fresh record high, 1832. That was a great pick, Rajeshji. It's doing fantastically well. I only wish the price point were a little lower, but what can you do? In a country like India, the good things become more and more expensive, and that's how it is. A high ticket item doing fantastically well, and remember, this was discussed before markets opened, so you could have taken a very nice punt. I see a lot of block deals happening on Trent as well, but the ticket item is so high, the price of the ticket is so high that you're seeing smaller block deals, but nonetheless very sharp transactions happening. Let's look at the overall volume on Trent. Of course, yesterday was a blowout, so it can't look at yesterday's volume in comparison. 3.5 lakh shares traded so far, and we are still 14 minutes into trade. Fresh record high. Great pick, Rajesh, from your side. Tanya, what are you watching?
I think, Shail, we should take a quick technical check on NTPC as well. So remember, after the earnings, the stock has rallied a lot, and we saw a bit of a consolidation, but today it's back in action. Mr. Palvia, is the stock overheated, or what would be the right buy zone if we talk about NTPC?
So overall structure for NTPC is on the bullish side. Already we have seen a mild profit taking in the last couple of trading sessions, but stock is very well holding above its previous breakout level. So almost it's available near to its important support area of 215, 216. So this is the right price to again re-enter in the NTPC. 215 should be your stop loss for trading point of view, and once stock crosses about 224, 225, then this rally can extend towards 235 to 240 in the near term also. So overall structure for NTPC is on the bullish side. One can buy at the current level also.
Shell metal stocks, they are shining again. If we see APL, Apollo Tubes, and then Ratnamani, and then okay, metal stocks are again back in action, like Jindal Steel and JSW Steel. So what are your thoughts, Mr. Palvia, on this entire metal pack, and any top bets from this particular sector?
So JSW Steel, we have already mentioned, and we are bullish for this stock, and we are projecting target of 850, 855. Stock is very well holding above all its important moving averages. Already breakout was there for last 4 days consolidation range. So overall structure for JSW Steel is on the bullish side. Another stock that we like from that pack is at the current juncture is Jindal Steel and Power. stock is in uptrend and outperformance is there. And looking at the overall setup, stock is forming higher top, higher bottom formation on the daily as well as on the weekly chart. And the kind of buying interest is there in the stock price that we are projecting target of 700 to 705. You can buy with stop loss of 670 for trading point of view.
Okay, unstoppable rally as far as trend is concerned. Bang on for that, Mr. Palvia. And any other turnaround story? You know, we have seen, I mean, it happened for Zomato, Gland Pharma, you know, after the stellar Q1 numbers. Any other turnaround story that you are expecting, especially, you know, if we talk about near term?
So currently we are focusing on the paper stocks. Most of the paper stocks are showing
Okay.
good accumulation activity since last couple of trading sessions. So one can look at this sector also. We do expect that in the near term, good amount of rally we can see in most of the paper stocks as accumulation activity is happening. So, yes, paper, the NSE ticker is Pakka paper is one of the stock where we are focusing. Accumulation activity was there since last couple of week, and looking at the setup, we expect that if stocks holds above 128 level, then possibly on the higher side 155, 160 could be the target in the near term basis also. Another stock from that space is Kuntum Paper is another stock where we are focusing. A very strong buying action in last couple of trading session, and looking at the setup, we expect that this stock can really further higher towards 235 to 40 in the near term basis. So Kuntum Paper is also one can look at with stop loss of 195. Even on the publication space, one can look at Navneet publication also. Navneet publication is also looking attractive. Since last couple of trading session, buying interest is taking place. So one can buy this stock also with stop loss of 140 on the higher side. Once stock crosses above 152, then this stock can also show good rally towards 165 to 170.
Right. It's about 17, 18 minutes to trade. Let's look at the broader markets now. The Nifty, as I said, is battling 19600 before the 10 a.m. credit policy comes in. So 19598 in front of you, down 33. Remember, today's low was 19560, and from there over the last 15 minutes we've seen a mild uptick, but the fact remains that it opened gap down, and it's still trying to recoup. Weekly expiry, and of course the RBI credit policy before that, markets completely range bound as far as the top two indices are concerned. Nifty Bank down 95 at 44,783. Nifty IT down 120 points, 30,815. That doesn't mean that there is no action outside of the Nifty and Bank Nifty. Very, very strong traction coming in across the spectrum of sectors. FDC from the pharma space, record high 415. Trent is what you caught pre-markets, Rajesh's top pick. Fresh record high 1832, 2.5% higher post fantastic set of numbers announced during market hours yesterday. Praj Industries 488, 2.3% higher, another record high. Cipla 1275 record high, Dr. Reddy's record high, and we have Bharat Forge as record high. So despite the red tick on the market, these are record highs. There are so many 52-week highs that it will be really difficult for me to mark all of them, but let me take a few names. Zensar Technologies 7% higher, 528. We have Ashok Leyland 1% higher, 188. We have Chalet Hotels down 0.6% at 505. Nevertheless, a fresh 52-week high on the stock, and there are many like ONGC, Oil India, and of course Eris Life Sciences and Zydus Life. Now let's look at high beta stocks that define the broader market sentiment. You have Suzlon that I very rarely point out, but again 4.5% higher, 2040. India Cement 2.2% higher. Rajesh caught it pretty early, 234. BHEL 0.5% higher, 101.70. Nika 0.5% higher, 147. These are the gainers here. As far as defense is concerned, we caught BEL very early. Zen Technologies again a record high, 3.5% higher, 846. Nice traction coming back in Midhani, 2% higher, 352. And of course, earnings boy Mastock, 0.5% higher, 1825. Tanya, these are the trends in the broader market, but today there is no stopping trend. Again, a fresh record high, 1842. Fantastic pick, Rajesh ji. Tanya.
Absolutely. And Mr. Palvia, any contra bet that is worth taking at this point in time?
You mean to say about on the shorting side? But I'll avoid at this moment to go short in the market because the overall structure is on the bullish side. So we should remain with the trend only. Trend is moving up. So, and in the technical, there is a term one should follow only trend. So trend is on the bullish side. So I'll try to buy only on the buying opportunity in the market till the overall structure is on the bullish side. One stock again where I am keeping eye, that is Thomas Cook. Very strong buying action is taking place after the opening, and the kind of breakout which we are seeing on the daily, weekly, or as well as on the monthly time frame. I do believe that this stock can keep continuing furthermore upside towards 130, 140 in the positional basis. So I think one can look at Thomas Cook also. Your stop loss should be around 109 for upside target of 130 to 140.
Okay, absolutely. And Shail, anything that catches your fancy as we speak?
Yeah, Tanya, across the board, there is quite a strong traction that's coming in. And while the broader markets are taking very well, the indices are flat. Let's look at the top gainers in the F&O space. This is Max Financial, 863, 8.7% higher. I don't think so, at this point of time we can take a technical call on it. It's already exploded 8.7% higher. I see traction coming in Balrampur Chini. This is India's largest sugar company, 0.6% higher, 398. The entire energy space is abuzz. Of course, ONGC and Oil India reacting to the 11-month high that we are seeing on crude oil prices, and that's one reason. What is ticking away merrily, and this is what Rajesh should look at on his charts, is Coforge in the IT space. It's the top gainer in the IT space, 1.3% higher, 51.24. Rajesh, this is a very high beta stock. Would you take a call here?
Yeah, definitely, Shanji. Most of the mid-cap IT stocks are doing good compared to large-cap IT stocks, and Coforge is one of the stock where if we analyze the weekly time frame, the stock is continuously moving in up-sloping channel. And looking at the buying interest since last couple of weeks, it clearly is showing that yes, this momentum can extend further higher towards 5,300 to 5,400. So yes, we are having bullish view on Coforge. One can buy at the current market price also. If you get any chance to buy around 5125, 5120 level, that is a very attractive level to buy with the risk to reward point of view. Keep your stop loss at around 5100. Upside target is 5300 to 5350 on the higher side. So most of the mid-cap IT stocks, like even if you look at the LTTS, L&T Technology Services, this stock is also moving in the same chart pattern, like up-sloping channel is taking place on the weekly chart, and this stock is also showing good traction since last couple of weeks. So LTTS is also buy from our side, and we are projecting target of 4500 on the higher side. So one can buy LTTS also with the stop loss of 4265.
Shail, I think we should look at Praj Industries also.
Both stocks.
stock is also up in the
Yes,
trade
of
today.
course, Tanya. Please go ahead. Record high 488. Please go ahead.
Mr. Palvia, your thoughts, your take on this particular counter? We have been, talking about this stock, Praj Industries. What would be the right buy zone, and what are your thoughts?
We are very much bullish on Praj Industry, and just a disclaimer, we are holding this stock in our fund also for our clients. And a very strong breakout on the daily chart. If you look at the chart structure on the daily chart, so it's a clear rounding bottom formation was taken place, and the breakout with the volume has happened in the Praj Industry. Stock managed to taken out its multiple resistance zone on the daily as well as on the weekly time frame, and this saucer pattern is clearly indicating that this stock can continue furthermore upside. 540 550 is the target we are projecting in the near term to short term basis, so one can buy and accumulate this stock. If you get any minor corrective action also, you can add in your short term portfolio with stop loss of 460. Upside target is 540 to 560 in the near term to short term basis.
Tanya, this is a great portfolio stock. Unfortunately, at record high for those who've got in. No point exiting Praj Industries. Please continue. It's the greatest possible proxy for India's ethanol play, which is, of course, a company which makes ethanol producing equipment for distilleries and for those companies who want to set up ethanol treatment plants. Remember, 25% mix of ethanol in petrol is what the government's long-term target is, and this has been a fabulous multi-bagger over the last 10-12 years. Tanya picked it up really well. If you've been a part of Business Today television over the past 15 days, Ashish Chaturmota pointed it out way below 440, 430, and it's doing pretty well. Rajesh stamps his approval for a portfolio pick on Praj Industries. Okay, 9:44, ladies and gentlemen, and probably it's the time to look at the corporate part of our show. Fairly shortly, we'll have the top management of CMS Infosystems joining us in a while. Mr. Anush Raghavan, he's the president, Cash Logistics Solutions, will join us. But till that time, let's enjoy what the markets are doing. Broader markets are flat ahead of credit policy. Nifty down 41, Bank Nifty down 96, and this is probably also the time to bid goodbye to Mr. Palvia. Rajesh, thank you so much. We'll remember Trent for a while, and of course all the other wonderful picks that you gave on the cement space. Tanya.
Absolutely, Shail. I think all eyes are now on the RBI's monetary policy, and let's see how that pans out. But absolutely, I mean, cement stocks that continue to outperform, and there are some stocks from a mid cap and small cap. You pointed out Trent. Trent is on a roll, as Mr. Palvia mentioned, and let's see the top gainers and losers. So Adani Group stocks, they are also buzzing, Shail. Adani Enterprises, Adani Ports, they are up to the tune of 1% as we speak.
Adani, these are running on earnings, Tanya, and of course there was a news item yesterday that the group wants to exit its FMCG business via Adani Wilmar. So that would mean more liquidity, although I'm not sure how Adani Wilmar is treating it. It's up 0.5%. The Adani Group has 10 stocks listed on the markets. Yes, 10 stocks, and apart from ACC, all 9 are in the green, starting with Adani Transmission. You very rightly mentioned Adani Enterprises and Adani Ports, both of them acting on earnings. That's the overall play there. It's a very high beta group. It's best not to give views on this particular group and look at other stocks that are ticking merrily away. Let's look at the price of CMS. CMS Info Systems. Remember, this is the company which is behind your ATMs across the country being always filled with money. They do the cash logistics business and management of transfer of cash between ATMs and cash depots, if you may, and they are responsible to keep ATMs liquid. So whenever you put in your debit card or God forbid a credit card into an ATM, you always get the desired amount of money, although maybe not the desired type of currency. We'll have very shortly Mr. Anush Raghavan, President Cash Logistics Solutions, joining us. You see the stock price in front of the screen. I think Anush is there.
Yes, he's with us.
Mr. Raghavan, can you hear us?
I can hear you. Good morning. Thank you for having me on the show.
I think you are good. Tanya, would you care to discuss what the earnings have been?
Sure.
Absolutely. Yeah, please go ahead, Mr. Raghavan.
So I think we had another robust quarter of quarter one performance behind us. We clocked more than 13% on our revenue growth. But more importantly, from a EBITDA and PAT perspective, it was 19% and 22% respectively. And just to highlight to you, I think this is 9 out of 10 quarters in the history of the company where we've clocked a PAT growth of more than 20%. It's also been the first quarter for us where we've been able to increase our services revenue by more than 500 crores. The first quarter where we clocked the services revenue of 500 crores. So, both our businesses, cash logistics and managed services, which is more technology oriented, continue to perform very robustly.
Okay, absolutely. And Mr. Raghavan, this was your 5th consecutive quarter with 20% year-on-year PAT growth. So what's really helping you, keep up this kind of a momentum?
Absolutely. So since the time that we went public in December 21, we had built up a very robust order book. If you look at the construct of both our core businesses around cash logistics and managed services, the cash logistics business has over the period built itself a very strong right to win on the back of having a large diversified infrastructure spread across length and breadth of the country. We are present in more than 97% of the districts. So as and when there is incremental business that comes in the form of business points, now we could be servicing ATMs, we could be servicing retail touch points or bank branches. And each of this is growing very robustly in India. If you look at the longer term cash usage, in just the last 1 year, counterintuitive to most people's beliefs, the urban centers, metros have seen a 10% increase in cash usage. That compounded with the efforts of the banking industry and the government to ensure a deeper penetration of financial access through financial inclusion, opening of new bank branches, is leading to a very robust cash usage across semi-urban and rural India as well. On the technology side of the business, where we typically help and partner with the banks in enabling running the ATM channel, as well as various softwares that we license out to the banks, there is a very strong refresh cycle of capital upgrades that are happening. Of the more than currently about 2.6 lakh ATMs in the country, in the last 2 years, this number would have grown by almost 20 to 25,000 in terms of replacement as well as incremental expansion. We have partnered with Nautilus Yosan, who's amongst the largest globally for ATMs. So both these core businesses give us a very strong right to win. With that, we built up a robust order book. We are sitting on an order book of almost 8,300 crores, 90% of which is implemented, but which will lead to revenues accruing over a 5 to 7 year period.
Right. Anush, I'd just like to ask some forward-looking questions. In India, at a time when digital payments have completely taken over the Indian economy, about 80-90 billion transactions are happening on a monthly basis. Where do you see growth coming on? I would presume that given the ease of digital transactions happening, slowly people will move away from handling cash. I'll give you anecdotal evidence in Delhi or in Bombay. it's difficult to get money back from a taxi or an auto driver. He says पेटीएम करो या डिजिटल पेमेंट कर दो, मेरे पास चेंज नहीं है वापस करने को. So in this kind of an environment, Anush, how is CMS looking to expand its business? I understand in India cash will not disappear, but you know what the trend is, and the trend is to move invisibly and digitally.
Absolutely. And I think, Shail, when you look at this, I think it's important to, first of all, define for ourselves what do we mean when we're talking about digital replacing cash, or what we mean by the cash economy. Now, CMS as a banking partner, we work exclusively with and through the banks, which means in a way, we are very closely linked to the formalized economy. The perception that most people have in terms of declining cash usage is probably when they talk about the informal part of the economy. 3 months back, we took the opportunity of our annual Investor Day to share with the public at large a cash vibrancy report, which seeks to demonstrate in a great degree of granularity and to sort of break down where is currency coming into the economy and where is it really being spent. And that sort of shatters some of these typical perceptions about what is happening to cash, specifically in the formalized part of the economy. Like I said, the first key data point is metros, which is sort of where most people perceive that digital will overtake cash usage, continue to see almost double-digit growth of cash usage. Second, when you think of the ATM channel, I think it's an extremely important and relevant channel of access to finance for most people. Even today, ATMs transact 50% more in terms of value, as compared to all credit and debit cards put together in the country. So I think it's a fairly large, robust usage. A very recent report by a large consulting firm estimated that 2/3 of all retail spends continue to happen in the form of cash. So I think cash continues to remain extremely relevant in the country. It is still by and large one of the lowest cost of payment transactions, relatively frictionless, and extremely convenient for people to use. At CMS, we make our goal very simple, which is we focus on helping partner the banks and expanding access to the financial channel. We want to make currency available where people need it, when they need it, at the lowest possible cost.
That, but do you think that the discontinuance of 2000 rupee notes and shift to lower value notes will increase engagements at ATMs? I mean, do you see this as a tailwind for your business?
Even before the policy change on the 2000 rupee notes, there was only a very small percentage of ATMs which were even in fact dispensing 2000 rupee notes. I think if I remember the data correctly, it was about maybe 5 to 7% of the ATMs were programmed to dispense 2000 notes. So as such, the change in the policy doesn't have any material or significant impact on us. I agree with you. There could be some potential tailwinds in terms of just making the transactions more frictionless, getting access to, like Shail mentioned, change, for example, on a 2000 rupee note would potentially have been more challenging than today a 500 or 200. But by and large, in the short to mid term, we don't anticipate any real. I think it's a neutral event for us.
Okay, absolutely. And if we talk about the cash management business, the revenue growth at 12% YOY was lower than in recent quarters. But do you see this kind of growth to return to normal levels from the second quarter onwards?
So the first quarter the cash business is sort of a little bit of cyclicality to it, just based on it. I mean, broadly, I think the performance of the businesses is not as much linked to the direct usage of cash as it is linked to the consumption in the broader economy. Third and the fourth quarter tend to have a bunching up of the festive periods and wedding season, so that leads to a greater traction. But having said that, when we think about our forward-looking guidance, about 2 years back, we gave a FY25 guidance to the markets, which is that as a management team, we are goaling ourselves on doubling the revenues in a 4-year period from FY21 to FY25, which puts us in a revenue range of 2,500 to 2,700 crores. Doubling in a 4-year period roughly translates to an 18% plus CAGR. For the last 2 years, we've been able to grow close to 20%. So we believe we are well on track to achieving that. And as a team, that's what we are focused on.
Okay, absolutely, Mr. Raghavan. On that wonderful note, thank you so much for sharing these wonderful insights and being with us here on Business Today Television, and all the best for the coming quarters as well.
Thank you for having me on the show. Thank you.
Okay, Shail, back to the markets now, and all eyes are absolutely on the policy decision. So let's see how that goes. But any stocks on your radar as we speak? Okay, absolutely. I think he's not able to hear us, but we'll get back to him. Meanwhile, let's look at the markets and see how the markets are doing at this point in time. Well, clearly Nifty on a flattish note, ahead of the decision. 19,583 is the level where we are at this point in time, and it's completely, a stock specific action that is happening. Sensex also down around 193 points, lower at 65,800 level. And if you look at the stocks, some of the top gainers and losers, we should pull up that for you from today's trading session. Of course, we mentioned Adani Group stocks, Adani Enterprises and Adani Ports. They continue to be the top gainers from today's trading session, and BPCL, DV's Lab, some of the other top gainers for you. ONGC, remember we were talking about this PSU pack as well. On the flip side, we have Asian Paints, Britannia Industry, Nestle India, some of the counters from the FMCG pack that is not supporting the markets as we speak. Tata Consumers, HCL Tech, some of the other top losers from today's trading session. Let's pull up Nifty Bank for you, and let's see how that particular index is doing ahead of the RBI policy decision. And let me pull up that. Okay, Nifty Bank is trading 135 points lower, 44,742 is the level. And let's see how PSU banks and private banks, and let's pull up those stocks for you. So some of the counters like Maharashtra Bank, Canara Bank, they are facing some selling pressure. 1% downtick there on Maharashtra Bank, Canara Bank, Union Bank and Bank of Baroda, some of other PSU names that are trading in the red as we speak. On the other hand, IOB, UCO Bank, Central Bank, these are the banks that are trading in the green as we speak. IOB up around 2%. And let's look at some of the private bank counters as well. So let's pull up some of the stocks from that space. Private bank is of course down 66 points as we speak. Bandhan Bank, the top loser from this pack. Federal Bank, ICICI Bank, these are some of the other top losers from the private banking space. IndusInd Bank, RBL Bank, these are among the top gainers as we speak. But all eyes are on the RBI monetary policy, and let's see, and we just have to wait and watch. Meanwhile, markets on a quiet note as we speak, and these are some of the gainers for you on your screen. Clearly it's a stock specific action, and losers of course FMCG pack, really not supporting the markets at this point in time. Some of the other losers, if we see healthcare index, that is also down. Pharma is not supporting that much, but it's still in the green. Let's see how the stocks are doing from that particular sector. So Ipca Lab, Pfizer, these are the top gainers from the pharma pack, and Cipla is also one of them. Remember, Cipla has been, the stock has witnessed a strong rally. Okay, so I think Mr. Das has started speaking. Let's just cut across to that.
Remain healthiest in more than a decade, with historically high levels of capital, declining levels of non-performing assets, and rising profitability. Corporate balance sheets are robust with lower leverage, improving debt servicing capacity, and strong profitability. Lower current account deficit and ample capital flows have imparted strength to our external sector. The resultant accretion to foreign exchange reserves has provided a buffer against external shocks. Overall, India's strong macroeconomic fundamentals have laid the foundations for sustainable growth. In a moment like this, we need to continue with our efforts to maintain macro-financial stability while pushing our growth frontier further. India is uniquely placed to benefit from the ongoing transformational shifts in the global economy in the wake of geopolitical realignments and technological innovations. A large economy marching ahead with vast domestic demand, untapped resources, and demographic advantages, India can become the new growth engine for the world. In this background, the Monetary Policy Committee met on 8th, 9th, and 10th of August. After detailed deliberation on all relevant aspects, the Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6%, 6.5%. It's 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. Let me now explain the MPC's rationale for these decisions on the policy rate and the stance. Headline inflation, after reaching a low of 4.3% in May 2023, rose in June and is expected to surge during July-August, led by vegetable prices. While the vegetable price shock may reverse quickly, possible El Nino weather conditions along with global food prices need to be watched closely against the backdrop of a skewed southwest monsoon so far. These developments warrant a heightened vigil on the evolving inflation trajectory. The cumulative rate hike of 250 basis points undertaken by the MPC so far is working its way into the economy. Nevertheless, domestic economic activity is holding up well and is likely to retain its momentum despite weak external demand. Considering this confluence of factors, the MPC decided to remain watchful and evaluate the emerging situation. Consequently, the MPC decided to keep the policy repo rate unchanged at 6.5% with preparedness to act should the situation so warrant. The MPC remains resolute in its commitment to align inflation to the 4% target and anchoring of inflation expectations. Further, with monetary transmission still underway, and I have given some details in the footnote of my statement with regard to this, when I say monetary policy transmission is still underway, there are some additional information given in the footnote. Those of you who are interested may have a look at it. Further, with monetary transmission still underway and headline inflation remaining higher than the 4% target, the MPC decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. I would now like to provide our assessment of the growth and inflation scenario. First, I would like to take up global growth. The global economy continues to face daunting challenges of elevated inflation, high levels of debt, tight and volatile financial conditions, continuing geopolitical tensions, fragmentations, and extreme weather conditions. Belying earlier apprehensions, a number of economies have demonstrated remarkable resilience and the grim prospects of hard landing appear to have receded. Nevertheless, global growth is likely to remain low by historical standards in the current year and also in the next few years. Despite upward revision in the global growth forecast for 2023 by the International Monetary Fund. World merchandise trade volume growth is projected by the WTO to decelerate from 2.7% in 2022 to 1.7% in 2023. Headline inflation is easing unevenly across countries and remains above the target in major economies. While the pace of monetary tightening has been scaled down, policy rates could stay higher for longer. Financial markets, which had been buoyed by expectations of an early end to the cycle of monetary tightening, have turned volatile with sizable two-way movements in response to recent rating events and incoming data. Turning to global growth, these external factors are likely to impinge on the growth prospects of most advanced and emerging economies. India is, however, expected to withstand these external headwinds far better than many other countries. The momentum of overall economic activity in India continues to be positive. On the supply side, crop sowing has picked up with steady progress in the southwest monsoon. The temporal and spatial distribution of monsoon has, however, been uneven. Industrial activity is holding ground, as is evident from the latest data on Index of Industrial Production, that is IIP, Core Industries Output, and Purchasing Managers Index, that is PMI for manufacturing. Buoyant services activity is reflected in healthy expansion in e-way bills, toll collections, railway freight, and a sharp jump in services PMI. On the other hand, commercial vehicle sales and domestic air cargo traffic contracted during Q1 of the current financial year. Aggregate demand conditions continue to be buoyant. Among urban demand indicators, domestic air passenger traffic, passenger vehicle sales, and households credit are exhibiting sustained growth. In the case of rural demand, tractor and fertilizer sales improved in June, while two-wheeler sales moderated. High growth in agricultural credit and improving sales volume of major fast-moving consumer goods, that is FMCG companies, suggest incipient recovery in rural demand, which will be reinforced by improving Kharif prospects. So what I have done under growth is that first I highlighted about the supply conditions, the supply side factors. Then I have highlighted the aggregate demand conditions consisting of both rural and urban demand. And let me now turn to investment activity. Investment activity gained further steam on the back of government capital expenditure, rising business optimism, and revival in private capex in certain key sectors. Continued increase in import and production of capital goods further reaffirms this trend. Construction activity also remains strong in first quarter of this year, as indicated by healthy growth in cement production and steel consumption. Capacity utilization in the manufacturing sector at 76.3% remained above the long period average, remained above the long-term average of 73.7%. The total flow of resources to the commercial sector from banks and other sources taken together has increased by rupees 7.5 lakh crore during the financial year 23-24 so far, that is up to July 28th, as compared with 5.7 lakh crore a year ago. So just to repeat the figures, the flow of resources to the commercial sector in the current year so far is 7.5 lakh crore, and in the corresponding period of last year it was 5.7 7 lakh crore. On the downside, however, merchandise exports and non-oil, non-gold imports contracted further in June, and the growth in services exports decelerated amidst slowing external demand. Looking ahead, these underlying developments and the upcoming festival season are expected to provide support to private consumption and investment activity. The spillovers emanating from weak external demand and protracted geopolitical tensions, however, pose risks to this outlook. Taking all these factors into consideration, real GDP growth for 2023-24, that is for the current year, is projected at 6.5%, with Q1 at 8%, Q2 at 6.5%, Q3 at 6%, and Q4 at 5.7%. Real GDP growth for Q1 of next financial year, that is 24-25, is projected at 6.6%. The risks are evenly balanced. Let me now turn to inflation. The moderation in headline inflation to 4.6% in Q1 of 23-24 was in line with the projections set out in the June MPC meeting. There was pickup in headline inflation to 4.8% in June due to an upturn in food inflation. On the positive side, inflation excluding food and fuel, that is core inflation, has softened by more than 100 basis points from its recent peak in January 2023. The month of July has witnessed accentuation of food inflation, primarily on account of vegetables. The spike in tomato prices and further increase in prices of cereals and pulses have contributed to this. Consequently, a substantial increase in headline inflation would occur in the near term. Going by the past trends, vegetable prices may see a significant correction after a few months. The prospects of Kharif crops have also brightened thanks to improvement in the progress of the monsoon. Uncertainties, however, remain on domestic food price outlook due to sudden weather events and possible El Nino conditions in August and September. August and beyond. Global food prices are also exhibiting a hardening bias on renewed geopolitical tensions. Crude oil prices have firmed up in the recent weeks, and its outlook is clouded by demand-supply uncertainties. Assessment of the future trajectory of inflation is a continuous process. We have a choice to modify our inflation projections in every meeting of the MPC if warranted, in the interest of better guidance, or avoid frequent changes and revise them only on fewer occasions for simplicity of presentation. Given the continuing uncertainties, our latest CPI inflation projection for 2023-24, assuming a normal monsoon, is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. Let me just repeat these numbers for better clarity. CPI inflation projections for 2023-24, that is for the current year, assuming a normal monsoon, as I have said, is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. Further, CPI inflation for first quarter of the next financial year, that is 2024-25, is projected at 5.2%. The risks are evenly balanced. Headline inflation projection for the second quarter of 23-24, that is, for the months of July, August, and September this year, has been revised up substantially, primarily due to price shock from vegetables. Given the likely short-term nature of these shocks, Monetary policy can look through high inflation prints caused by such shocks for some time. The frequent incidences of recurring food price shocks, however, pose a risk to anchoring of inflation expectations, which was underway and which has been underway since September 2022. The role of continued and timely supply-side interventions assumes criticality in limiting the severity and duration of such shocks. In such circumstances, it is necessary to be watchful of the emerging trends and the risks to price stability. We have to stand in readiness to go beyond keeping Arjuna's eye to deploying policy instruments, if necessary. I reiterate what I said in the previous June policy statement. Bringing headline inflation within the tolerance band is not enough. We need to remain firmly focused on aligning inflation to the target of 4%. With this, I would now like to take up the liquidity and financial market conditions. The level of surplus liquidity in the system has gone up in the recent months on the back of the return of rupees 2,000 banknotes to the banking system, RBI surplus transfer to the government, pickup in government spending and capital inflows. The overall daily absorption under the liquidity adjustment facility, that is LAF, was 1.7 lakh crore in June and 1.8 lakh crore in July this year. Despite such surplus liquidity, market response to RBI's 14-day variable rate repo auctions, that is VRRR auctions, was lukewarm. Instead, banks preferred to place their surplus liquidity in the less remunerative standing deposit facility, that is SDF. Although the fine-tuning VRRR auctions of 1 to 4 days maturity during this period evoked better response from the market, this essentially, let me just read it again. Although the fine-tuning VRRR auctions of 1 to 4 days maturity during this period evoked better response from the market, this essentially reflects greater risk aversion among the banks to park large funds under the main operation. In this context, it is necessary to reiterate that fine-tuning operations, that is overnight operations up to 13 days, are undertaken to deal with special or exceptional situations and cannot become a rule. In recent years, our stated stance on liquidity is to maintain adequate liquidity in the system to meet the productive requirements of the economy. Excess liquidity, on the other hand, can pose risks to price stability and also to financial stability. Hence, efficient liquidity management requires continuous assessment of the level of surplus liquidity so that additional measures are undertaken as and when necessary to impound the element of excess liquidity. Accordingly, it has been decided that with effect from the fortnight beginning August 12, scheduled banks shall maintain, I repeat, scheduled banks shall maintain an incremental cash reserve ratio, that is ICRR, of 10% on the increase in their net demand and time liabilities, that is NDTL, between May 19th and July 28th. I would like to read this sentence again so that the message gets across. It has been decided that with effect from 12th of August, scheduled banks shall maintain an incremental CRR, that is ICRR, of 10% on increase in their NDTL between May 19th and July 28th. And what I am now going to say is equally important. This measure is intended to absorb the surplus liquidity generated by various factors referred to earlier, including the return of rupees 2,000 notes to the banking system. This is purely a temporary measure for managing the liquidity overhang. Even after this temporary impounding, there will be adequate liquidity in the system to meet the credit needs of the economy. We have reviewed the position, and on that basis alone, on the basis of our internal assessment, I am making this statement that even after this temporary impounding, there will be adequate liquidity in the system to meet the credit needs of the economy. The incremental CRR will be reviewed on 8th September or earlier with a view to returning the impounded funds to the banking system ahead of the festival season. I must add that the existing cash reserve ratio, that is CRR, remains unchanged at 4.5%. I would now like to focus on financial stability. The Indian financial sector has been stable and resilient as reflected in sustained growth in bank credit, low levels of non-performing assets, and adequate capital and liquidity buffers. Macro stress tests for credit risk reveal that scheduled commercial banks would be able to comply with the minimum capital requirements even under severe stress scenarios. There is, however, no room for complacency because it is during tranquil and good times that vulnerabilities may creep in. Hence, buffers are best built up during these periods. A stable financial system is a prerequisite for price stability and sustained growth. This is a shared responsibility in which regulated entities like banks, NBFCs, and others are important stakeholders. On its part, the Reserve Bank remains steadfast in its commitment to safeguard the financial system from the emerging and potential challenges. We expect the same from the regulated entities also. As regards the external sector, India's current account deficit was contained at 2% of GDP in 2022-23 as compared with 1.2% in 2021-22. Merchandise trade deficit has narrowed in the first quarter of the current financial year, that is 23-24, with contraction in imports exceeding contraction in exports. Services exports and remittances are, however, expected to provide cushion to the current account deficit. We therefore expect the current account deficit to remain eminently manageable during the current financial year also. On the financing side, foreign portfolio investment, that is FPI flows, have remained buoyant in 2023-24, that is in the current year so far. Net FPI inflows have been $20.1 billion up to August 8, which is the highest since 2014-15. In the corresponding period of the previous year, there were net outflows of $12.6 billion. The inflows under external commercial borrowings also witnessed a turnaround with net inflows of $6 billion during April-June this year, as against net outflows of $2.9 billion a year ago. Net foreign direct investment, that is net FDI flows to India, on the other hand, fell to $5.5 billion during April-May 2023 from $10.6 billion a year ago, reflecting a global slowdown in FDI inflows or in FDI flows. Latest available data suggest that India's external debt to GDP ratio improved to 18.9% at the end of March 23 from 20% at the end of March 2022. The Indian rupee has remained stable since January 2023. Foreign exchange reserves have crossed the mark of US 600 billion. The umbrella has gathered strength, and I am not saying this in the context of the monsoon rains. I would now like to proceed and announce certain additional measures. As you would be aware, we announced several measures as a part of the MPC statement, and a number of these measures have very far-reaching consequences, and they make a lot of impact on our overall financial inclusion, on our financial, on deepening of credit, on the spread of UPI, and on other aspects of the economy. So we have a few measures. I request your continued patience. The first announcement relates to review of regulatory framework for financial benchmark administrators. It has been decided to revise the extant regulations issued in June 2019 and put in place a comprehensive risk-based framework for administration of financial benchmarks. This will cover all benchmarks related to foreign exchange, interest rates, money markets, and government securities. The revised directions will provide greater assurance about the accuracy and integrity of the financial benchmarks. The next announcement relates to review of regulatory framework for infrastructure debt fund NBFCs, that is IDF NBFCs. At present, infrastructure debt funds provide refinancing facilities for lenders in the infrastructure sector. The extant regulatory framework for IDFs has been revised. The key changes in the revised framework are: 1. Withdrawal of the requirement to have a sponsor for the IDFs. 2. Allowing IDFs to finance toll operate transfer, that is TOT projects, as direct lenders. 3. Permitting IDFs to raise funds through ECBs. And 4. Making tripartite agreements optional for PPP projects. These changes are expected to further augment the capacity for infrastructure financing in the country. The next announcement relates to greater transparency in interest rate reset of equated monthly installments based floating rate loans. Now let me just read it again, I think that was too long. It basically, the next announcement relates to bringing in greater transparency in interest rate reset of EMI installment based floating interest loans. It is proposed to put in place a transparent framework for reset of interest rates on floating interest loans. The framework will require regulated entities to, again there are various components, it will require the regulated entities to, number 1, clearly communicate with borrowers for resetting the tenor and or the EMI. Number 2, provide options for switching to fixed rate loans or foreclosure of loans. 3, disclose various charges incidental to the exercise of the options. And 4, ensure proper communication of key information to the borrowers. These measures will further strengthen consumer protection. The next announcement relates to consolidation and harmonization of instructions for supervisory data submission. The Reserve Bank has from time to time issued several guidelines on submission of supervisory returns by the supervised entities. It has been decided to consolidate and harmonize such guidelines into a single master direction to reduce compliance burden and to promote greater ease of doing business for supervised entities. And the next announcement, actually there are 3 announcements within this announcement, and it relates to UPI. And basically the announcements are related to bringing in conversational payments and offline capacity on the UPI, enhancement in transaction limit of small value offline digital payments. The details are as follows. With the objective of harnessing new technologies for enhancing the digital payments experience for users, It is proposed to, number one, enable conversational payments on UPI, which will enable the users to engage in conversation with artificial intelligence powered systems to make payments. Number two, introduce offline payments on UPI using near field communication technology through UPI Lite on device wallet. And number three, enhance the transaction limit for small value digital payments in offline mode from rupees 200 to rupees 500 within the overall limit of rupees 2000 per payment instrument. These initiatives will further deepen the reach and use of digital payments in the country. And this is the final announcement, the next one, and it's really impactful. We expect this announcement going forward will have a huge impact on our credit sector. The Reserve Bank, in association with the Reserve Bank Innovation Hub, started a pilot project in September last year for frictionless credit delivery through end-to-end digital processes, starting with Kisan Credit Card Loans, that is KCC loans. The pilot for KCC loans is currently operational in select districts of Madhya Pradesh, Tamil Nadu, Karnataka, UP and Maharashtra. Recently, dairy loans have been included in the pilot project in select districts of Gujarat. Based on the learnings from the pilots and to expand the scope of end-to-end digital lending processes, a public tech platform for frictionless credit delivery, I repeat, a public tech platform for frictionless credit delivery is being developed by the Reserve Bank Innovation Hub. The platform is intended to be rolled out as a pilot project in a calibrated manner. It will have an open architecture and open application programming interface, that is API and standards, to which all financial sector players can connect seamlessly. This initiative will accelerate the penetration of credit to the hitherto underserved regions and further deepen financial inclusion in our country. Let me now conclude. We have made good progress in sustaining India's growth momentum. While inflation has moderated, the job is still not done. Inflationary risks persist amidst volatile international food and energy prices, lingering geopolitical tensions, and weather-related uncertainties. In charting the course of monetary policy, we continuously assess the impact of our past actions, the evolving inflation dynamics, and the implications of the incoming data for the economic outlook. I reiterate our commitment to align CPI inflation to the 4% target on a durable basis. We do look through idiosyncratic shocks, but if such idiosyncrasies show signs of persistence, we have to act. As we prepare to celebrate the Independence Day, the air is filled with hope and promise. Let me end by recalling the prophetic words of Mahatma Gandhi, and it is as follows. I have no doubt that our country would rise to the greatest height among the nations of the world. Thank you. Namaskar.
Okay, that was the RBI policy for you. Rates unchanged at 6.5% as it was expected, and RBI has raised inflation forecast for FY24 to 5.4% from 5.1% earlier. MSF rate and bank rate rates also unchanged at 6.75%. RBI has kept withdrawal of accommodation stance unchanged as well, and The Q2 FY24 GDP seen at 6.5%. These are some of the highlights from the policy. CRR also remains unchanged at 4.5%. But Mr. Das mentioned that vegetable prices shock may reverse soon, and that is a kind of relief that is expected going forward. And also he said that Indian financial sector that has been stable and resilient, and that is being reflected in the sustained growth numbers as well. Then let's talk about some of the other highlights. Spike in tomato prices and rise in cereal and pulses contributed to inflation. He mentioned that, and as I stated earlier, that vegetable prices may see a significant correction. So that is a relief that is likely to come, and the economy has continued to grow at a reasonable pace. Upcoming festival season is expected to provide support to private consumption and investment activities. Let's do one thing. Let's take a look at the markets and how the markets are doing after the policy decision. So if we look at Nifty at this point in time, Nifty is down to the tune of 115 points now. 19,515 is the level where we are at. Deep cuts both for Nifty and Sensex. Sensex now down around 400 points, 65,578. Clearly, Street is not really liking the decision, and we'll talk to some of our guests to find out what's the reason behind this kind of profit booking that we are seeing at this point in time. And let's pull up the Nifty bank sector for you. That index should come up, and let's find out what's really happening there. So Nifty bank also down around 358 points, 348 points as we speak. 44,538 is the level where we are at, and clearly Bandhan Bank, ICICI Bank, these are among the top losers. So let's welcome our guest on the show today and find out more about the policy. So we have with us G. Chokalingam. He is the founder and MD at Economics Research, and we also have with us Mr. Amit Somani. He is the senior fund manager at Tata Asset Management. Shail is also now with us. Shail, first of all, coming to you, what do you make of this policy, and what's really not working for the street as we are seeing deep cuts?
So the two things, Tanya, that are not working for the market are incremental CRR deposits of 10%, to mop up excessive liquidity, which the central bank governor has put in. That's a very, very big negative seen by the market, especially on banks. And the top losers are the Nifty Bank, the Nifty PSU banking sector index, the Nifty Private Bank index. These are the top three losers. And of course, the raising of the inflation target from 5.1 to 5.4%. So these two things, and the fact that the governor has repeatedly said that the focus remains in aligning inflation to what we have said earlier, which is 4%. So these two things are what are bothering the market in the short term. But we have Mr. Chokalingam who's seen the market much more than I have. Let's go to him directly. What do you think, sir, are the other things that caught your attention in Dr. Shaktikanta Das's statement?
Frankly speaking, nothing has caught my eyes in a significant manner. Because all are in expected way. The status quo, most parameters, the status quo is maintained. These are all in expected way. So there are two important perspectives I want to present, to understand monetary policy and markets. The one, from starting from 2014, the repo rate, benchmark interest rate has come down from 8% to 4% in May 2020. So we had a stability of economy during this process, and then we had a major hit in terms of COVID, which was deflationary. So it came down to 4%. So almost a 400 basis point cut happened. Then the second phase, starting from May 2020, to February 23, the rate has gone up to 6.5%. So 250 basis point rebound happened. But this rebound happened because the inflation went out of control. So now we are at 6.5%. Are we going back to 8% or are we going back to 4%? That is a question. Certainly, in the light of the today's policy announcement also, I can make a very bold statement that we are certain to be in the mid-range of around 6.5% or 6%, at least for another 3 to 6 months. And it is possible that this rate can come down to even 5.5% in the next 6 months to 12 months. So that is the forecast, because a lot of good things are happening on the inflation front. We all know that WPI inflation is negative and the CPI inflation also has come down a lot. Now there are only two problems for the inflation and markets. One is the rising oil price. If you see, oil price used to be as low as 47% on year-on-year basis 5 6 months back. Now world oil price is down just 8% on year-on-year basis, because Saudi Arabia has cut the oil output, so it's going up. This is the area of concern. And then vegetable rice, wheat prices rise in the Indian economy. But if you want to decompose the inflationary impact, there are two factors. One, short-term disruption, like tomato, onion prices, vegetable, fruits prices, they shoot up. That I won't call it as a structural change. That is because of supply-demand gap in the very short term. I would call it as a disruption. Second, the inflation rate jumps or falls because of the structural change. They are bound by the global factors and domestic factors in a big way related to GDP and oil prices. So structural factors are conducive for India's inflation to fall further, because China yesterday they announced certain numbers which show sign of deflation. European economy almost stagnant. US economy has come down, and US oil output is at a record high level. So therefore, the oil price is unlikely to shoot up further, and the slowdown in the growth is also likely to moderate the metal prices. Only copper price has gone up. Still, all other metal prices are quite low. So therefore, India is in a best position, to ride on, the contain the inflation rate. And RBI, to be very straightforward, I think it has no role to play in the stock market for next 6 months, because they have to maintain this mid path of around 6%, 6.5% for at least 6 months. Then they will start cutting down. So there is no worry for the market at all. And the market is falling because your market cap is around 300.
It's down.
It's down because of profit booking. The overall market cap has hit 300. Because of profit booking, the overall market cap has hit 300. On the growth, one is the banking, obviously, topmost sector, which is 16% credit growth, and followed by automobile sector, and then to some extent the telecom.
Okay,
so
absolutely.
Many sectors are growing in single digit. Valuation comfort is not there. So that is the reason for correction in the market. I do believe another 2-3% correction can happen in the stock market in the short term.
Sure. And what are your thoughts on the rate trajectory from here, Mr. Chokalingam?
Yeah, the rate would remain at 6.5 at least for another 1 or 2 months, or 2 even 3 months. After that, it will definitely fall, because the world economy is not going to pick up in a big manner. Oil price is not going to hit triple digit because of the signs of deflationary condition in China and near stagnation in European growth and slowdown in the US economy. Even in India, if you see in July, our oil import has come down to 8 months low. So there are a lot of signs of worldwide correction in the growth. So therefore, oil is also going to be comfortable. And most importantly, on the disruption factors which I mentioned, vegetable, rice, wheat, fruit prices. Very interesting data point. As of yesterday, the rainfall has improved. Today, the cumulative rainfall used to be deficit in double digit. Now it is exactly equivalent to the long period average. The cumulative rainfall, there is no deviation. It's absolutely normal. And second, if you see the spatial distribution, that was also a major concern till 2 weeks back. Now 72% of 36 subdivisions have received a normal or excess rainfall. Even the Kharif area has improved to last year level. So this is only a temporary phenomenon. The vegetable, fruits, and rice, wheat prices, within 1 or 2 months, all this would start coming down once you really get the Kharif crop number followed by winter crop number.
Okay, absolutely. Let me now get in. Let me now ask Amit Somani, Mr. Amit Somani. Mr. Somani, what about you? What do you make of the decision, and which sectors, according to you, will be in focus after the policy, and what really didn't work? I think the incremental CRR thing, that is something that the markets are not really liking at this point in time.
Thank you. So I will give this more from a fixed income perspective rather than broad market. But yes, so ICRR is something that market was not expecting, and they gave, I think, back of the envelope calculation seems that it will increase the CRR by about 3 to 5% of what currently banks are required to maintain with RBI. This applies only on NDTLs post 2019, and this comes into effect on 12th of August, and it gets reversed on 8th of September, as mentioned by RBI. So one, I think banking system, I mean, will have to show that additional amount 3 to 5% in terms of parking with the RBI. That will have some impact on whatever the NIMs, if I were to put it that way. But I think beyond that, RBI is also very mindful that one, there was a flush of liquidity in a banking system, given post 2000 rupees callback into the banking system. And July and August are typical months seasonally, shows the currency circulation going back into the banking system, which means that RBI utilized this window, July and August window, to hike this through ICRR, and trying to address it, and then look beyond once the reversal starts happening, as also mentioned by Mr. Governor, that the festive seasons, and I think they are very clear that they always want to maintain a liquidity to the extent that doesn't hamper any credit growth. It seems, I mean, there is a broad number
Right, Mr.
which.
Somani. Let's look at the markets for a while. There has been a drastic fall in both the Nifty and the Bank Nifty. Of course, as you rightly mentioned, it's the incremental additional CRR that's come into the banking space. We've seen a mild
Guys,
green
I'm
tick
not
at
able to hear.
19,530, but unlikely to be held. Mr. Somani, the governor has gone at lengths to describe the wonderful situation that India's macro and micro picture are in. Given the fact that we've corrected, you know, quite okay from the recent top that we've seen on the Nifty and the Bank Nifty. As a fund manager, given the second half is in front of us, what are the sectors that look good to you for you to put in good money?
Uh, I am sorry, I don't want to get into the sector discussion right now. And this thing, I will leave it to other guests for that.
Okay. Mr. Chokalingam, what are the sectors that look attractive to you at present levels?
Certainly, the banking sector, as I mentioned, the interest rate cycle has peaked out. It's going to fall maybe after 2 3 months. The chances are very high. And second, as I mentioned, the rainfall has improved. Kharif area under Kharif crop also has improved. So that is also going to be positive in terms of containing the inflation rate. Other directly, the tailwinds are also there for the banking sector. The credit growth is now above 16%, which is a 10-year record high. The quality of asset of the banking sector is also at the 10-year record high level. So therefore, yes, there could be some profit booking volatility, but ultimately in the short to medium term, the banking sector would do extremely well, and followed by automobile sector, particularly stocks like Maruti. Personally, we don't have, but we have a bike on Maruti. And general auto sector will do among the sectors. And third, the telecom, because non-tax revenues of the governments are coming down after exhausting the cash pile of the PSUs. So the one area where the non-tax revenues can be increased is allowing the telecom companies to consistently, in a small way, to increase the tariff for the public, and that's already visible. So that would be positive for mobile operators. These are the three sectors which would do very well. But otherwise, from a defensive perspective, one can consider FMCG. But if you ask me what can grow faster among all the major sectors, these are the three sectors which can grow much faster.
Right. Mr. Chokalingam, let's take this discussion a bit forward. You are a very good stock picker when it comes to mid caps and small caps, especially in the banks. What would you prefer?
A little late, to be honest, because the banks are run up. But still, if there is any decline, one can buy Bank of Maharashtra. Bank of Maharashtra looks to me like a mini HDFC Bank. It should not be misinterpreted as comparison of the stock prices. I would not say that it will go to 3 digit, but if you see the parameters, whether it is a credit growth, CASA ratio, net NPA, provision coverage, excellent. I mean, and apart from that, in Q1 FY24 itself, the bank started making provision for ECL, expected credit loss provision, which is going to be implemented from the current year. So that is a one stock for medium to long term. Amazing stock. Net NPA is just 0.25 or 0.24, which is the lowest in the industry. And second in the large cap, definitely HDFC Bank. But for long-term wealth creation, I'm extremely bullish on Bank of Maharashtra.
Okay, Mr. Chokalingam, in one quick word on the way, global macro indicators have also shot up, be it dollar index, yields have surged a lot. There's also a talk of some of the US banks into trouble. That is, I'm talking about Moody's commentary. So could that also cast some amount of shadow on our macros as well?
They will give opportunity in the stock market. Unfortunately, I'm sorry to sound a little overconfident. This is what I maintained 2007, 8, 9 Lehman crisis also. The US economy was shaking, but our markets fell 22%. And foreign investors ran away from India. So I was comparing with, when you have a tremor or earthquake, when buildings are shaking, you try to move to the stronger building, but they went back to shaking building, leaving a strong building India. So similar things are keep happening now and then. But I must tell you that the Indian banks have nothing to do with US banks to a large extent. More than 90% of the lending happens within India. More than 90% of the resource mobilization by the banks happen within India. So we are least linked fundamentally or in terms of economic parameters. But certainly perception in the short term plays more role than the economic reasons. So it can give opportunity. Even if you look at the US economy, they are talking of $1 trillion of outstanding credit card by US citizens. So then they are talking about $1 trillion interest payment by US government every year. So therefore, India's story looks amazing. Yes, right now valuations are stretched. Right now there are three short-term risks: November, December election results, and Rajasthan, Madhya Pradesh, and then May 24 general election. If we can pass three short-term risks, I would like to say that India is set for an amazing wealth creation story for another 5 years, only subject to any possible war from North Korea or in Taiwan. Otherwise, India's story is going to be excellent. Let us recall what S&P also said. For next 7-8 years, our average growth will be about 6%. So that will be the fastest growth in the world.
Absolutely. Mr. Chokalingam, lastly, any picks that you have from railway pack or defense pack, these sector have been buzzing off late, and any picks that you have from power sector as well?
Yes. Power sector, we have a buy call on Tata Power. Personally, I do not own it. I would say I have pitched this as a great futuristic stock. The Tata management, I don't have to work for it. What is interesting is that they have been saying that the renewable energy would become 80% of the total power produced by Tata Power, and they have been working on it in a very successful manner already. Already they delivered credible increase in the share of renewable energy in the total power, and they are also doing very well in the rooftop solar. So this is a one stock, not for short term, medium to long term. I think this is going to be a ESG stock, and it's going to be a stock which will be liked by a lot of foreign investors in the next 1 to 3 years. And I would advise continuously, some caution for the retail investors on, railway stocks and different stocks. So let us not forget the fact that whenever there is a bull market in the small cap space, these two jump like anything. So you have to be very early entrant to make money. Otherwise, you will have to wait for another 3 years to get back your principal. So I do not see the valuation comfort in any of those. One can consider, Indoco remedies. I personally again do not have. This is our official buy recommendation. I've been successful, in giving a recommendation in the past on JB Chemical and Unicum. So after that, I was breaking my mind what could be the next one. Of course, it cannot give you reward like a JB Chemical. That was outstanding, but I
Okay,
definitely feel
absolutely.
Indoco Remedy can give excellent return because it trades at three times, domestic branded sales and one time export
Sure.
sales. So many branded sales companies are trading at even 7, 8 times to sales, enterprise value to sales. So I
Okay.
feel it can create a lot of wealth in the medium to long term.
Okay, okay, absolutely. Got that, Mr. Chokalingam. But Mr. Somani, coming to you now, what are your thoughts on the rate trajectory from here on?
Sure. So I think policy is broadly in line with what market was anticipating. The ICRR that we mentioned, so I think that will have some impact on the short-term rates for at least next 1 month. The 10-year currently continues to actually hover around the same range. It was a little higher, which only, I mean, kind of reconfirms that the entire policy was in line. In fact, the market feels confident that RBI has laid emphasis of on the spike in inflation. Do they remain confident that vegetable prices will reverse? I think they are at the same time they have mentioned that they will continue to act if necessary, which gives confidence to the market that RBI continues to hold Arjun eye on inflation number. So while the near-term trajectory seems to be on a higher side, with the kind of revision that we are seeing, probably this month's inflation seems upward of 6.5. The number will remain there for next couple of months. But I think beyond that, RBI the markets are also pretty much confident that RBI has kept its eye, and thus we see that the 10-year continue to range between 7.5 to 7 quarter levels or so. Upper end remains a good time. It throws a good opportunity for someone who wants to tap into. The short-term rates are likely to see some increase, and I think most of the correction should get done by today end of day or tomorrow at max. This measure that they have taken is likely to reverse on 8th of September. So it will be a little kind of a short term pain in a very very short term.
Okay, absolutely got that. And on that note, thank you so much, gentlemen. Thank you, Mr. Chokalingam. Thank you, Mr. Samani and Shell, for being with us here on Business Today Television and for sharing these valuable insights. So, with that, it's time for me and my team to wrap up this edition of Market Today. And clearly, we have recovered a tad bit from the day's low. Remember, 65,509 was the low on Sensex. We are currently trading at 65,684 odd level. For Nifty, we have reclaimed that 19,500 mark. The low was 19,495. Let's see how the action pans out going forward. But here's the action for you on the screen. So with that, it's a wrap up. But stay tuned for all the latest market updates. And many thanks for watching.
I believe by and large, people who are opting for the new regimes are the new taxpayers. And the old taxpayer, see long-term saving having made commitment and there being